Whoa! What's up? Look at this. Me, Spencer, JC, Steve. What's going on? Did you know we just had a FOMC announcement? Anyone care? Yay or nay?
I care what the market's doing, and it ain't doing a damn thing. Is what it's not doing, right? Straz, tell them you were just hooting and hollering, and nothing's happening. Tell them.
So, I mean, it's been 30 minutes since the announcement. Powell just came up to the podium to start speaking. And unless I'm missing something, this is like the most boring Fed reaction ever. You got a little like rollover in the dollar, but it's still up slightly. Is anything moving on this at all?
What's moving is the afternoon scenery here for the morning show, fellas. Here, I like this more chill afternoon vibe, kind of like an evening look. I like that, Spencer. Was that you?
I didn't make that, but I asked it to get made.
Look at us.
It's pretty nice.
2 days.
Just a little, no big deal. Just a little FOMC afternoon chit chat. Listen, guys, if you're listening out there, my name is JC Peretz. We're here with Steve Spence, Spencer Israel, Steve Spencer, Spencer Israel, Mr. Steve Straza. So many S's. And we can chit chat honestly about what the market's doing. I think we just reiterated it's not doing much, but rather than just making things up about what the Fed said and what the AI says it's different on this one, why don't we just go to the man? Let's just skip right to it. We are thrilled to be joined by Mr. John Netto. Mr. Netto, a market wizard. We have a market wizard with us today. That's pretty cool. Future summa cum laude. I didn't get very good grades, but for the people who get good grades, what is it? A sum laude?
I don't know. So there's different rankings, etc. But we'll see how law school treats me in the end.
Listen, the more of like these Greek and Roman names I hear, like that makes you smarter. Is kind of how like I heard. You know?
It gets you paid more. I don't know if it makes you smarter, JC.
Oh, but isn't it smart to get paid more? I like that. That's a good strategy. Get paid more. See, that's a smart strategy. Speaking of getting paid, Mr. Netto, can you please school us? Coming into this, you are the whisperer. You are our whisperer. You have whispered to many of the biggest institutions over the years as well. So we're thrilled to have you and your perspective. I don't know what the market was expecting this guy to say or not to say. Can you school us? What happened?
Sure. Let's lay some foundation real quick in terms of what this event represents. There's, as many people know, as we talked about before on the show, there are 8 Fed meetings a year that are scheduled. 4 of those are what are called the Summary of Economic Projections. Those happen on a quarterly basis. So let's think about March, June, September, and December. And with this being a March meeting, this is one of those meetings where we get the Summary of Economic Projections. That means the Fed forecast, their Fed funds median forecast for not only 2025 or the present year, but for 26, 27, and the long-term forecast. They also do things like core PCE, they do GDP. So you have a bevy of not only their projections of interest rates, but also pertinent economic data as well. Now, again, that happens only 4 times on a quarterly basis. So today was one of those events. And the question coming into today was, what's going to happen with the Fed and their reaction function as a consequence of President Trump's first 80, 90 days in office, the tariffs that have been put in place, a lot of that, and the impact that's going to have economically. And for most people, because the Fed's a little bit handcuffed in terms of what's going to happen next 30 days of the tariffs, that they don't really know much more than any of us. And the way the decision came out is those economic projections that I just referenced went unchanged. And so, as you guys just mentioned, the market reaction is largely undone. And that's a consequence of both. One, the Fed, didn't choose to take a stand on how this might manifest itself. And they chose to not take a stand by literally leaving their forecasts for both interest rate expectations unchanged. And number 2, they didn't decide to impute or to guess what the economy may do beyond that. And so that's why, in terms of adjusting the statement, they also had a slight angle. Some people were speculating, JC, that the Fed might deal with quantitative tightening today and make an adjustment there. But really what they did there was a very nominal $5 billion a month cap on treasuries. And that's not going to really, that wasn't what people were looking for in that regard. So by and large, statement largely unchanged, although the statement did address that there's increased uncertainty, big shock there. So nothing the market's going to do with that. And that's your 90-second synopsis, JC and Steve.
And then, so of all that, I know Straz has got questions for today. Sorry, Straz, I'm so selfish here. No, I just want to know, of all of that stuff, what is it that stands out the most as to why the market's considering it a nothing burger?
It's because the SEP predictions went unchanged. So they're looking for 2 cuts this year. So think about the 2025 interest rate Fed funds median forecast, which was rounded at 3.9% because we're effectively, remember there's a maximum and a minimum lower bound. So 4.25 to 4.5, they come down 2 cuts, that puts it 3.9 or 3.75 to 4. That rounds to 3.875, but they rounded to 3.9 when it shows it. I know I'm getting really wonky and technical, but that's just what it is. And so they did not change. Now, some people thought maybe they might go to only 1 cut this year, which would put us at 4.2 versus 3.9. But they came in effectively 3.9 and chose to do nothing. So if you want to isolate to one thing, I'd say 1A. There's almost like a 2 thing. I'd say 1A and 1B. 1A would be, 2025 Fed funds median forecast remained unchanged. And then 1B would be the quantitative tightening, which they could have, materially tweaked or even announced that they're going to, end altogether. They chose not to do that either. In other words, they would, stop selling treasuries. So in that regard, there's just not much to do as the forecast remained unchanged. And really, I think the June meeting is going to be a much liver meeting on all sorts of fronts because we'll have a better sense of, remember, there's a legal backdrop here. And this is where I'd say some of my law school stuff has helped me further appreciate some of the injunctive relief that people were seeking against the Trump administration's executive orders all over federal courts across the country and what that means in terms of shaking things out. Let's just say this. Treasuries underwent a lot of pressure last year, meaning treasury prices are selling off, yields are rising on this idea that we just simply can't service this debt. I think a colorable argument, a reasonable argument can be made that the Doge, cuts that are going on could present a larger existential representation of efficiency in government spending. And that may be, counteracting some of this potential debt servicing costs that's going on because we are seeing some good two-way action from this. And to me, I'm digressing here for a moment, but I like gold a lot in this market. Surprise, surprise. And if you look at in the last 50
hold
years,
on, let me stop you right there. You
Yeah,
like
okay.
gold in this market because it's working and it's in an uptrend and you appreciate that kind of thing like we do around here? Or
No,
is it
very much
because
so.
of other reasons?
There are tons of other reasons as well, I would say. But let's start from a quantitative perspective, from a price action perspective on gold. So if you look back at gold's, and a colleague of mine who wrote who wrote a chapter in the Global Macro Edge, the book that I wrote 7 years ago, Cameron Christ, want to give him credit for all this. He came out with an article. He writes for Bloomberg. Came out with an article last week highlighting the 50% increases in gold, meaning how many days did it take for gold to put in a 50% increase? And so in essence, with gold at 3,040 right now, that when it hit 2020 was about 1,150 days ago, okay? And that's the third longest period of time that gold has taken to put on a 50% increase in the markets. I think that's telling and instructive for a couple of reasons. One, on the other times where gold put in, we're talking late 70s, we're also talking the rally in 2009. Gold was subject to multiple 30 and 40% pullbacks when it put in when it put in these big, fast 50% gains. With this current 50% gain being the third longest time, meaning 1,150 days it's taken to put in that gain, I think that this move is quantitatively more sustainable for gold, and it can move to 3,500 before it moves to 2,500. In other words, if we've seen gold on this move, these 3, 4, 5% pullbacks have been bid into. And I think that's a reflection both of the macro backdrop and the methodical allocation that's going on from institutions, which is why people who've traded gold the last 20 years, like myself, have been caught both for good and bad on these steep 15, 20% one-day shock moves, not that big in one day, but over multiple weeks. I think that's much less likely given the more methodical nature gold has taken on this current 50% ascension that's taken basically, 3.5 years to put on this gain. That I think is a more sustainable move given this macro backdrop.
Wow, that's great perspective. That's interesting. I hadn't thought of it like that at all. Straza?
Gold's trading on highs, seeing a nice reaction here. John, a friend mentioned to me that, I guess in the FOMC dot plot, that the dovish wing of the FOMC is more or less disappearing.
So let's talk about the dot plot real quick. So when it comes to the dot plot, there's 17 dots in there, and we have to impute or guess who's picking what. In other words,
Right.
We don't know whose name's attached to which dot. I think there's a reasonable inference that can be made from just seeing the nature of those dots that's being said. But technically speaking, the governors or the directors don't disclose per se, or they're not mandated to disclose, but we can infer what they disclose in that regard. So the aggregation of those dots and that dovish swing is dissipating, I think, as a consequence both of economics and the realities of what tariffs represent. We don't completely understand, how this trade war can play out. And tariffs can be remedied literally by the stroke of a pen from the president fairly quickly. So whereas interest rates take a long time to move throughout, as we've seen as part of this negotiation between Trump and Canada and Mexico, there's a lot more gyration that takes place and many more binary moves, Steve.
Do non-voting members get dots too?
Yeah,
Or no?
absolutely. Yeah, no, absolutely, they do. Absolutely.
Really?
So it's all 17,
And
non-voting and voting for sure. Absolutely.
So you don't know which dot even gets a vote?
Correct. So that's
Oh,
why
that's
there's whole cottage industry, Steve, that try and impute, which I do as well, about who represents which dot. But at the end of the day, and some of them, and that's why people follow these Fed speeches, or the non-PAL speeches. So if Williams were to go and speak somewhere, or back when Yellen, I think, was the Fed governor of San Francisco, people will follow them because there are more prominent members and less prominent members. And so, okay, Bullard says this or whoever, we're like, okay, that's good, but they're not a voting member, or they are a voting member. Remember, there's permanent voting members, those governors, and then there's a cyclical nature to that where they cycle every year, and then someone who's a non-voting member then becomes a voting member in the next year. So you also want to track that as well, potentially. But the dots, we don't formally know who votes for what.
So say today is a snooze fest, not getting much action here. Looking ahead to what might happen in future FOMC events and announcements, what kind of reaction do you expect from the market when they finally do stop QT?
Very favorable one. No doubt. Listen, yields have been a big part of. Well, they've been a part of this pressure. I don't think, and I don't think unfairly so. I mean, we go back to 2022. We saw one of the most sharpest increase in mortgage interest rates we've seen in a long time. In terms of actual percentage on percentage, going from 3% mortgage interest rates to 7% mortgage interest rates is no joke. And a lot of people out there payment shop when they're looking to buy a house, reasonably so. But in terms of, QT stopping here, it'll definitely have an impact. I think it's a factor, but, tariffs, given that the U.S. runs at such a tremendous trade deficit, throwing tariffs in there is interesting. And I think what's not immaterial is announcements like Apple 2 weeks ago that they're going to invest $500 billion to bring and effectively do more risk mitigation to control that. And I think there's a lot of benefits for Apple in that, just beyond the tariff dynamic in terms of controlling your supply chain. But that's another conversation, and I'll leave that to sharper minds than myself to ferret out. But to answer your question directly, yes, it would have a benefit. I think it'll be well telegraphed. That's not something I expect to be a surprise per se in the announcement. We'll hear from, Powell at a speech. We'll hear from other speakers, and that move will probably happen like at, noon Eastern time when a governor makes a speech, and the market will effectively price that out before it can even happen during the Fed release.
Listen, zooming out,
That's
all this is great, John. I really appreciate it. This is freaking awesome. You guys out there, if you're listening to this, I mean, this is real talk. This is what's really going on the floors of the biggest trading floors in the world. That 10-year yield chart that we just had up there, I mean, that tells such an amazing story. Think about how well stocks have done in an environment where yields have just been muted and the bond market's not this major headwind of any kind. It just seems like, more for longer. Another beneficiary of this, sideways yields is commodities. You're seeing it across the board, X energy. So that's why I wanted to bring it back to energy. This is an area that's been a major focus of ours, and some smart people we talked to as well. We're expecting a high volatility move, higher or lower, most likely higher, considering what gold and copper and some of these are doing. So based on what as our Fed whisperer, is that what they call it? How do you think that impacts the commodities markets? And you think energy, you think that's a tailwind for energy to just be next in line in that group?
I'm less confident on my energy call than I am on my gold call. I think the gold narrative that's developed is much clearer. And if you're going to go commodities, we need to talk about corn, soybeans, and wheat, and some of the ebb and flow that's happened there as well. I think also if you're going to talk about energy, you want to talk about heating oil and reformulated gasoline. In general, energy is probably priced where it's at, but I would defer to a more day-to-day energy expert, whereas my perspective on energy encompasses it as an input, generally speaking, into the Fed model and ultimately how I would trade treasuries around that, concerning that. And the reality is that absent a shock sort of from the energy market, I don't see crude. I'll just say this. It's not a headwind for sure. And what's otherwise, think about this, higher interest rates act as in a bit like a tax on the economy in terms of buying home, getting home loans. That's less money people can spend. Fortunately, energy has not done that. And it seems that the market is taking the Trump administration's desire to make energy affordable at face value. And then that, at least in part, explains what we're seeing right now in the energy market.
I love it. We'll bring Jason on for the last question, John. I know you're busy. We'll let you run. I really appreciate your time today. You've been really generous and really means a lot. Seriously, this is freaking awesome. Jason is here. Jason Pers, does a lot of the big stuff for us, all the fixed income, the commodity stuff, the Forex stuff. Back to the gold. Are you looking, so I appreciate you're looking at energy as more of an input into some of the calculations that the Fed is doing versus a trading vehicle for yourself. Totally get that. Correct me if I'm wrong. You're looking at the gold from more of a monetary standpoint, almost like a currency, weaker dollar. But how do you think about gold price in other currencies? Are you just looking at gold going up because of a weaker dollar and some of the other trend sort of momentum signals that you were seeing before? Or do you think of it like, these other Forex markets like Euro and Swissy and some of these others just absolutely ripping, and you're getting a huge unwind there on the positioning standpoint, and gold's just part of that trade? Or is there something where if you change the denominator, it's working too?
So let me address one point and then we can go from there. And that is, do I look at gold price on other currencies? And I've been, for 25 years, I've traded gold, maybe even 30 now. It's been, late 90s. So here's the bottom line. Owning other currencies is analogous, and owning gold is analogous to owning gold in euros. And then owning gold in yen, if you will, effectively means that you're short an equal dollar weighted amount, long gold versus short yen, long gold versus short euro, etc. I look at that more of as a broader portfolio play, and addressing the fact that there are idiosyncratic aspects embedded in each one of those currencies that may or may not reflect it. In other words, independent of what it may do relative to gold or relative to the dollar, it may be worth owning the British pound. It may be worth owning a little bit of the euro. It may be worth actually shorting Swiss franc. It may be worth, and then on top of that, I'm long gold as well. So if I happen to be a little more bearish on Euro USD, but I'm bullish on gold, then by implication, I'm going to then own gold in euros. Okay. Right. Now, do I want to do it on a one-to-one basis? Maybe, maybe not, but that's a function of the analysis that I perform and the overall market macro variables and day-to-day tactical allocation I want to put on. Okay. So I definitely factor in, because there could be a nice, and I think, Jason will appreciate this, is that if I can take a position in gold and synthetically dampen down some of that volatility, okay, by taking something that offsets that, then I've built a more efficient portfolio. And so I would say that, yes, I contemplate those things, but it's in the context of, can I structure this portfolio better and take advantage of idiosyncratic aspects that may exist between the relationships between those currencies? And that's the perspective I try and incorporate that and talk about in my book, The Global Macro Edge.
That's where I learned a lot of that stuff, is in the book, The Global Macro Edge. For you guys who haven't checked it out, it is a great book. One of the best books to just kind of figure out your trading strategy, your style, how you're going to do it. So I really, shout out to that book. It really helped me to kind of understand a couple things that I didn't at the time, especially if you want to be a macro trader. It's the way to go.
John, we'll put the link in the show notes so everybody can go find that. I love the fact that you just said that you're thinking about in different denominators. For me, I don't necessarily trade gold and short Swissy against it or anything like that, or at least I've never done it to date. For me, it's more looking at it as a weight of the evidence. How's gold doing in all these other currencies? And if you notice, before gold broke out in US dollars, it was already breaking out in everything else, right? It was breaking out in everything except in dollars and Swissy, and then it broke out in Swissy, and then it broke out in dollars ultimately, and the rest, as you say, is history. But those were the last dominoes to fall. Gold had already broken out. All those other currencies, in other words, had already broken down to all-time lows relative to gold, all of them. And Swissy and the dollar were the last ones, and now you're seeing it. So for me, it's more of like an information process versus I'm literally going to go out there and buy gold and short yen against it, right? I might one day. I haven't to date. Great. Well, listen, John, I appreciate you being here. This was great. Guys, Spencer just dropped the link in the chat to John's book. Love it. John, thank you so much. Appreciate you, my man.
Jason, thanks, everyone. Appreciate you guys.
Take it easy, guys.
Dude, John Netto in the house. How great was that, Spencer?
That was awesome. It's been a long time. Too long.
I know.
Since we've spoken to John. We have some other guests here. Let's bring them in. We got Louis. We got everyone here. Let's just bring them all in. Louis, Sam, Sean, come on down.
Hi, guys.
What's up?
What's up, Lou Dog? Sam,
It's
what's
a
happening?
party.
What's up, everybody?
Oh,
I got
Johnny
everybody
in the
here.
house. Look at
I
this.
like I like that we're putting on this charade that we give a shit about anything that the Fed just said. Listen, this is the only thing that matters right now. This is the only thing that matters right now. Since February 19th, when the index has peaked out, we've had exactly one trading day where the trading the index was green on the day and the volume was higher than the previous day. That's happened once. Until we have a green candle with some rising volume, I'm not interested in changing my mind on this.
And
market.
then how? So as somebody who's dumb when it comes to volume, because I ignore volume altogether, as somebody who's dumb about this stuff, can you school me on where you're seeing this volume? What kind of volume are you like? Where? Like
I'm just looking. I'm looking at the chart of the S&P 500 or the SPY. I'm looking at the QQQ, and every green day has traded on volume that was lower than the previous day, except once. That only happened one time where there was increasing volume, and the market rolled over 2 or 3 days later in the Nasdaq.
I love how you look at that, Sean. It's very impressive. I didn't know you had it in you.
Traders pay attention to these things, JC.
I don't know any volume to me means fucking nothing. It's always been noise to me. So I ignore it altogether. So I appreciate that you are there on the ground looking at volume. I just look at volume to see if it's liquid enough for me to trade. Is really where that's where I look at volume.
Well, look, everybody
Old school stuff.
Everybody wants the turn to happen, and whatever, bear market, bull market, we'll trade what's in front of us. But if anyone was looking to the Fed to come in and save the market today, I don't know what they were looking at. All you need to look at is what the market's doing. Look at the trading volumes. Look at what's happening every day. And until that trend that I talked about, until that reverses, I mean, we can't even talk about getting aggressively long here. There's repair that needs to be done.
Well, I'm getting aggressively long. Been getting aggressively long. Let me ask you this, Sean. A few weeks ago we were talking about selling premium, even like a week ago, talking about selling premium, selling volatility. The VIX is just completely collapsing right here. You seeing this?
Yeah, I mean, we're going to be below 20 by the end of the day, the way things are going.
How about that, huh?
Did you just say you're getting aggressively long? Did I just hear that?
Yeah, we talked about it in our meeting today.
Why?
I think there are opportunities. We talked about them. You know the levels. I'm in.
All right.
Strasser, you don't have that Polish zloty trading account?
Voice of God here. Enough about the Fed. Can we go?
Everybody can trade this lottie. Come on.
These guys made fun of me. These guys made fun of my Tesla. We're not going to get into the details of the trade, but I guess we'll see who's laughing a month or two from now about the Tesla trade. I guess we'll see who's laughing about the MicroStrategy trade. I guess we'll see what happens. We'll see.
Wait. We could take a panel now that everybody's here. How many people are bullish and how many people are bearish?
Oh,
yeah.
Bullish what? Bullish what?
Let's just talk about broadly the S&P 500. The S&P 500.
Thank you.
Who thinks it's
what time
bottomed?
frame?
Who thinks it's neutral? Who thinks it's bullish here?
If the S&P is above 5,600 and that's 560 on the SPYs, then line go up. Sorry.
I'll stand by what I said before. I'm not going to turn bullish until I see at least one green day on rising volume at a minimum. We haven't had that.
Dude, Dow above 42,000, S&P above 560. You're good.
I'm happy to trade a pop, but we got to see sellers stop having control of this market the way that they do. I'm with you, Sean.
And then
They don't
Louis
seem to have any control over the European and Asian markets in Latin America and Africa.
S&P 500.
No. What I'm saying is sellers.
Okay.
It just seems that the sellers have no control at all over every other market on the planet. Excuse me.
Can we move on? We actually prepared some slides for the people. We hadn't even gotten to them yet. Can we move on to that?
Charts.
We have so many charts here. We want to do an emergency state of the markets. That's why we're doing this, right? It's to sort of set the table, put all this in context. So point number one here, and that's why Jason's here, is commodities, right? So we have a few of these charts. I don't know who put one in here. We got platinum, we got silver, we got gold.
I know JC's excited about the platinum.
How can you not be? How can you not be excited about the platinum here? By the way, Netto pounding the table on gold. How about that? Didn't see that one coming.
That made my day.
Yeah, I mean, he's pounding the table on gold. That platinum's going to go, bro.
Yeah, Sam made a killer chart here. The squeeze pattern, the setup, it's beautiful. Heading up to 2000. If that starts to break out here, we talked about the levels today, getting over 1,100. Steve said 1,070. Anything between there, I think you got a buy signal, and this thing could really sail. A lot of people look at it like, oh, it's platinum. It's not as fun as the other ones. I think this thing can move. I like this one.
Look at how it moved in the last cycle, Jason. It broke out of a similar consolidation pattern and just screamed higher for a decade.
Yes. And that bandwidth is tight. Bands get tight. Low volatility usually leads to high volatility, and this thing could start breaking to the upside. I like it.
I just like these kinds of trades right now, period.
Good point. Yes, this pattern, and that's what we do well here is the patterns over and over again.
You like these kinds of trades that are uncorrelated with other things, or you like these types of trades because of the coiling?
And he's gone.
And
Oh wait, no, that was I did that because his camera.
He just didn't like the question.
No, Steve's here. His camera's being wonky.
We need 2 more faces so we can be the Brady Bunch.
yeah, Straza, do you like the coil or the non-correlated?
The coil makes it sweet, but like I'm open-minded to any of these non-correlated trades. So both.
Yeah, me too. I agree with Straza. Yeah,
And I don't know
coil.
what's wrong with my camera. Sorry.
All right. Before he runs, Louis, you want to give us your high-level thoughts on crypto here?
A big fat nothing burger. We were asking before whether we're bullish or bearish, and then the third option was neutral. I'm leaning neutral, right? We're still above 70k. Jason has what he calls his excuse my language, get the fuck out levels, right? And so as trying to see whether there's we're in a longer term uptrend. Above 70k we are, right? But then alternatively, we're still below 90,000, which is the big level of support that we've just broken below, and we're smack bang right in the middle of that. And there's absolutely no edge in trading this. If you want to trade this from the long side right now, I think that's a little bit rookie. And so I think that the better thing here to do is just to let this thing sit up and just give it some time. Give it some time.
Hey, Louis, I heard you talking about this, or I read you talking about this in your note recently, and I just want to play devil's advocate. Crazy question here.
Sure.
You mentioned you would buy Bitcoin at 70. You would also buy it at 90, right?
Mhm.
In between, it's the dead zone. Well, if I'm a lazy guy, and I am, why don't I just buy it at 80 and call it even?
That's what I did. I swear to God, that's what I did. I mean, listen, it's nothing material. I want to buy it above 90, and I want to buy even more above 102, to be fair. But like on a small, like a little bit. Yeah, that's what I did, Sean.
For two reasons.
The old guys
The
think
first
alike.
reason.
You just called
the
me a
first reason
rookie,
is-
bro. You heard him?
Well, the first reason is opportunity cost, right? This thing could just go sideways for months and months, and so
Yep.
I don't necessarily want to be
And I'm
holding an
okay
asset
with
that's
that.
just going
I'm okay with that
sideways.
with a little bit. I'm fine with that.
And then the second thing is defining risk. And so buying it at 80k versus 70k, you can define your risk a lot more tightly, increase the position size, make it a better trade. And so I think just waiting just a little bit of time and just getting a really good entry is probably better than just like swinging and pressing buy right in the middle of a range.
I do agree that it's in a box. You're above 70, which are the prior cycle highs. You're below 90, which are the recent support levels. You're just stuck in a box, right? 100%. 100%. All right, guys, I'm out myself. I appreciate you, Mr. Spencer, Israel, Shawnee Baby, Sam, Jason, John Netto, Lou Dog. Adios.
All right, JC's
Yeah.
hopping. This was fun. Louis got
Gotta
to hop.
hop as well. I'll see you guys later, but
We got a
appreciate
few
it.
more charts. We got a few more charts to share. Sam, you dropped a lot in here. So where are we starting?
I think we can
There's a
talk
lot.
about small caps. I think that's an interesting part of the market right now. That's slide number 12. So the Russell
Where's that?
2000 has data going back to around 2000, and never in its history has it ever had 8 consecutive down weeks, and that is what it just did. And now you have small caps trading at the high of the day. I'm looking at a daily PPO with the Russell 2000, the IWM, and that is flashing a buy signal for the first time in about a month now. So I think small caps are interesting.
Interesting. That's funny because it's been the dead zone for
It's been
a long
trash,
time. It's
frankly.
been for a long time. So
Yeah.
interesting that you're looking at this.
I'm honestly thinking the same thing, Sam. You know, if you look at it, and think about it this way, guys. If you go all the way back to 2000, you look at value to growth, you look at small caps to large caps. 2000, at that point, money started rotating into small caps, micro caps, international stocks, copper, and so on. It's kind of what we're seeing today. So it wouldn't be a bad thought to think this could be a massive washout here. Would I buy it right now as it's in a massive downtrend? No, but I would be interested. It does look like it bounced right off of the 200-week moving average. That's probably usually a good sign. Basically, they used to call that Algo City before people knew what algos were. But it's bouncing off of those levels, could start to reverse higher here. I like it. I think it's very interesting. A good setup, Sam.
I hate to keep harping on it, guys, but I'm looking at volumes right now, and I know we got the last hour of the trading day. There's going to be a lot of volume coming in the last hour, but we're barely, at least in the SPY, we're barely half of yesterday's volume in SPY right now. So yeah, we're rallying, but who gives a shit? Unless there's volume behind it, I'm not impressed.
Yeah, I'm not much of a volume guy, Sean.
I know.
I think I'm
I
with
know.
JC on that. I like the volume on my y-axis.
I am a volume guy, so I do agree with Sean to understand that, but at the same time, it's like that's usually how bottoms happen. There's usually that washout period. There is a little bit of low volume days. So it's like I agree with Sean's overall concept, which is there's no harm in sitting on your hands for a minute and waiting for it to get a little bit better before you just jump in. I think that makes
I'd be totally fine buying day 5 of the new bull market.
Exactly. I think too many people try to catch the bottom and the top, and it's fun to call. You know, I call the bottom on Friday. Yeah, it's fun to call them, but trading them is a different thing. As a trader, it's wait for it to actually show strength, so you have a place to put your stop loss, so you have a place to have an actual signal to buy in. Just buying a dip isn't going to do that.
Nope.
All right. As we enter the final hour of the trading day, we're all kind of watching the same thing, right? We are at the highs of the day, and I'm looking at the S&P futures, actually really across the board, right? We are we're at the high of the day. So will it hold? I don't know. Who can say? But let's see what happens. Okay, a couple more charts, then we'll hop out of here. And I do want to give Steve his flowers in a second. We have this discretionary versus staples chart. This is, I think...
I really want to talk about copper, Spencer. Come on.
Oh, come on, man. No, we don't want to talk about copper. We get it. We get it. Commodities are rocking. Okay?
We get it.
Bulls
You guys are doing well. We don't want to talk to you guys right now. We want to talk about the things that are depressed and doing badly.
No, we want to talk about the things that people actually own. No offense, Jason. All right? The things that
I want to talk about the things that are actually going to make money. That's the thing that we're trying to do.
I hear you, and you're right. But also the things that people actually own, right? I think we've for the past several weeks hammered the point pretty hard.
You're right. You're right.
China about the two themes, right? China and to a lesser extent Europe more broadly and the rest of the world, and commodities.
Yep.
We've hammered that theme. Let's look at a chart that's maybe a little bit more familiar to people in the US, which is this chart, right? This is Microsoft on top, ITB on the bottom. As someone who owns both of these things, this interests me. I don't like what it's implying right here, but
I'm short ITB.
Who put this together?
This is my chart.
Okay.
And what I was trying to show here is going back to October 2022, these two assets have been in structural bull markets. These have been some of the best places to be during this entire bull market. Technology has been incredible, and home builders have also been incredible. And you can see that they topped all of last year, and they are finally starting to resolve lower. Now, the one bullish point I will make is that neither of these are getting oversold in a big way. So there's not a lot of momentum to the downside. So bears haven't decisively resolved these patterns, but it's not looking good for the bulls.
And Sean, how you're short over what time frame?
I got an options bet on, let's see, I got May options on that. That's a good question. I could tell you right now. Oh, April. I got an April bear put
That's in a week and a half, April.
well, a month. It's got a month of expiration.
Yeah, all right, fine. A month expiration. Okay.
Are you short any technology, Sean?
I am not short any technology. I'm short a hotel. I'm short real estate. I'm short that's it. I should be short more, but you know.
Hindsight's 2020.
That's right.
But this
That's
could
right.
also be something to keep an eye on, because it could be if these turned into failed breakdowns, I think that's saying something about the bull market. If these just continue to go lower, I think it's saying something very bad about the bull market. So I think this is a good one to just keep on everybody's radar, keep updating it. It's a good chart, Sam. I like it.
For sure. And we've been talking about the semiconductors relative to the S&P 500 chart an awful lot, and that had a very similar distribution pattern as these two charts. And that chart is actually failing to break down and scooping back above that support level. So that's a great point you make, Jason.
False moves lead to fast moves, and that's the way the market goes. So we could go straight back up here if that really continues to happen. But it's got to be in more things than one. And I think that's what we're all saying here today more than anything else. Part of the reason why I want to do the exercise of what's bullish, what's bearish is just to kind of talk about, hey, we're all kind of in this zone of there is more neutral than bullish here, and waiting for more signals to come one way or the other. As traders, I'll take it to the downside. I'll take it to the upside, however it needs to go.
Let's go around the room here, and then we'll get out of here. Let's say next 4 to 8 weeks, where do we all stand in your coverage universe? So Jason, commodities and rates, where you at 4 to 8 weeks? Bullish, bearish, neutral?
My universe is everything, so I could go through the whole thing.
Okay.
But everybody wants to talk about the S&P 500, so let's talk about that with everything inside of it. If we're looking at international stocks, if we're looking at the S&P 500, I don't ever see a situation where the international stocks will just continue up and the S&P 500 will just continue down. I think this will base out at some point. I think it will head higher. I do think we bottomed, but I don't want to just go buy that bottom immediately. I want it to show me that it's actually bottoming more than me just thinking it's bottoming. As it goes to rates, you got a tradable low in bonds this year. I still think the long-term picture for rates is lower. Bond prices is lower, rates higher. And then if we go to commodities, I love gold, silver, copper. We've talked about it to death for a while now, so we don't have to really beat that point home anymore. But I think it's a very good trade to just continue to look at the commodities complex and take the trades as they come.
Sean, what are you looking to do? Are you looking to sell premium still?
No, the easy money on that has been made, I think, with VIX heading back down below 20. I think it's tough to make any really longer term bets here until the market declares itself that it has found a bottom. I like that Jason thinks the bottom is in. He might be right, but I'm not convinced yet. I want to see some follow through green days first.
I'm 70-30. I'm not convinced yet either. I'm 70-30. Okay. I think it is, but once again, I'm 70-30.
I don't know. My spidey senses feels that the market has a little bit lower to go. I'm not calling. Look, I'm not some doom guy. I'm not calling for a crash. I'm not Kenny. Calling.
That's why I asked you what you're doing, not what you think. Right.
I think we can go lower. But we need to see that washout bottom with the follow through days afterwards, and we just haven't seen that yet. I mean, if we've had that, it's very weak by historical standards.
Sam, last one. Next 4 to 8 weeks, bullish, bearish, neutral. Overall.
I'm neutral on the S&P 500, but gold stocks like GDX, very, very bullish. I'm looking for buying opportunities there.
I think we have a chart around here somewhere. GDX,
GDXJ, Junior Silver Miners.
Yes.
We had some great picks also on the gold rush lately.
Slide number 9 is a beautiful one.
Well, there's this.
Okay, this is GDX. So this is a little bit uglier,
Yeah.
but this is they both show a very similar picture of multi-decade accumulation patterns resolving to the upside. This one is a much more cleaner look. This is an equally weighted basket of the largest gold mining stocks: Agnico, Eagle Mines, Newmont, Wheaton Precious Metals, stocks like that. And boy, does this look fantastic.
Yeah, I have no notes.
Yeah.
It looks,
But at the end of the day, these are the things that are making money right now. You know, everybody's talking about the U.S. There's nowhere to invest. It's like, no, there is. The gold mining space is doing great. You know, it's up 20% year to date, where everything else is down. So you got to continue to look at that space. Look at these names inside of it. We have some names that are up 60, 70% this year already. So once again, continue to look at this space. Don't overlook it. A lot of returns are made in here when the later stages of the precious metals bull market happen, and that's what Sam and I have been thinking is happening at the moment.
all right, I just dropped the link in chat to get more of Sam and Jason's gold research for All Star Charts Gold Rush. And then before we hop, I just wanted to give a shout out to Straza because he's been for the last publicly, at least for the last like 9 months or so, he's been doing the breakout multiplier. And I always just kind of assumed that was a bull market strategy, and because it crushed in a bull market, and it's been crushing the last couple months, even though you know, we've had maybe a correct. We were in a correction for a minute there. We're not at the moment, but we were. So shout out to Straza and his breakout multiplier, because kind of proving me wrong there. It's not. It turns out it's not just a bull market strategy. It does work in sideways markets. So. Steve, I don't know if you're still here now, but shout out to you. And I'm dropping a link to that actually on the page on our site. And if you guys want to get involved, put the link in the chat. There it is. Check it out. Breakout multiplier. Turns out I was wrong. Steve was right. You can make money on intentional home run trades, even when the indexes are going down or they're choppy. There are good trades to be found. So, how do you, Steve? What we have to do next is we have to do a bear market breakout multiplier where we go like super duper long puts and something.
That's the thing, Spencer, is he's been making money from the long side.
Right.
I think he's put on one put trade.
You know, I know that's the crazy thing. We have to do the other way if the market affords us that opportunity. But shout out to Steve. Link in the chat. Scroll down if you're watching on the site. Get involved. Breakout multiplier. All right. Thank you guys for doing this. I know it was middle of the day. A lot of you have things going on. We appreciate it. Jason, Sam, Sean, Louie, John, JC, Steve, everyone watching in chat. Thank you. This was fun. We should do this more often. I don't know when the next time we do this. We'll do it again soon. Thanks for watching. Drop us a like. And that's what we got. Thanks, guys.
All right. Thanks for having us, guys. See you guys later.
Later, everybody.